If you turn back a few pages, please, to the little grid we did where we had financial or operating leases, lessee's books or lessor's books, in arrears or in advance. And if you remember on the previous session, we did in arrears a detailed examination question. What I need to do next, in the slightly shorter session, is an example of similar difficulty. Would you turn therefore to page 120 as we attempt an examination style question? We've looked at in arrears. We're now moving to in advance. It says there, to reward a long-serving senior lecturer, a college seeks to buy a specialist sports car, an Aston Martin, as a company car taxed as a benefit in kind. 2 advertisements appear at 11,000. The lecturer visits the showroom during his lunch break or her lunch break, and after an automobile association and independent experts checking the motor car, decides that the price is now 10,425, and that becomes the cash price. So near that, would you say cash price, please? $10,425 is a cash price. The college, the employer, will pay $2,500 immediately on the date the contract is signed, with 4 more installments. Does that make it 5 altogether? 1 plus 4, call it 5. The first installment is almost like a deposit. Would you agree in that first installment there cannot be any interest? Absolutely crucial that you know that. So the first installment on the date the contract is signed cannot have any interest in it. Remember, interest only clocks up if something is outstanding as time passes. The date the contract is signed, no time has passed. On the morning of the first day, the first $2,500 has been paid. The 5 installments in total multiplied by 2,500 comes to 12,500. And that commences our first step, gets us going on our first step. The question says, show how the company should account for this lease for the first year. I might underline for the first year. Please show all workings. So, if I may take you to a workings page, please. If you turn to something, a clean sheet. Let's start in advance. IAS 17. We have a finance lease, and we have the lessee's books. Once more, you're the lessee. You need this motor car for one of your staff. I'll be the lessor, the bank. So we come to step 1. The price structure. Clearly, the lease price is 5 times 2,500. Let me call that 12,500, less the cash price had the car been bought outright. It would have cost 10,425, an old Aston Martin, at that price, quite an old one. And this is the total interest. Step 1, 1 mark banked. If the examiner's feeling generous, 2 marks maybe, but usually about 1. Leave a line so the marker realizes you're moving on to the second step. This is the summary table, movement of the liability, as the examiner calls it. As usual, 6 columns. So let me run ahead and open them up. Give yourself plenty of room by working as far to the left and the right as you can. We have the year. We have the opening balance, which is obviously capital. No interest in there. Minus installment, and that gives us the outstanding or subtotal. Add to that the finance cost, said to be at the rate of 10%. Don't forget it is in advance. Not in arrears, and so you come to the closing balance, which I shall put onto that side. So how many columns is that? The year, the opening balance, the installment, that's 3. If you want to do the outstanding subtotal, I'd request that. It just helps you to hold it together. Then you have the finance cost, and then you have the closing balance. Quite important to see the difference between in advance and in arrears. Obviously, if it's in arrears, the installment is paid right at the end of the year. If it's in advance, the installment is paid at the start of the year. And hence the column, the installment column, slightly changes position. What I'd like you to do is to go back to the in arrears approach to see for yourself the differences. Otherwise, once you've done that, I invite you to come with me through this so-called difficult question. It isn't at all. There's a little technique. You practice a question or two. In fact, if you know just one question in arrears and one question in advance, and you know it really well, that's all you really need. Right, year 1. Now, one small request from me to you. When you're doing the in advance type of question, can you leave a line between each of the lines you're writing on? So I'm going to put my year 1 there, year 2, year 3, leaving a line between each of the years, leaving a line year 4, leaving a line year 5. In a few minutes you'll see why it's sensible to leave a line, extra line, when you're doing in advance. Right, let's begin. The cash price is 10,425. Don't forget this must be cash price. Exactly the same as in arrears. Let's take away from that the first installment, 2,500. Brackets means deducted. The running total is 7,925, on which we take 10%. Drop a decimal there, 793. In other words, put in a decimal soon after the 792. Call it 793. 8718. 8718. Take away 2,500. Comes to 6218. 10% thereon, 622. A running total to the right, 6,840. Let me run through that once more. You start with the cash price, never forget that. Not the lease price, the cash price. Deduct from that the installment. Indeed, the first installment is like a deposit. Do you agree that that first 2,500 cannot have any interest in it? So this first 2,500 has no interest in it. I don't mean the second 2,500, I mean the first. Because the day you sign the contract, you pay 2,500. So if you're the lessee and the lessor, you pay me 2,500, a bit like a deposit. There cannot be any interest in that. And then you carry out the procedure as per normal. That 6840 comes forward. Take away the 2,500. It comes to 4340. 10%, quite easy. 434. 4774. 4774. Take away 2,500. It comes to 2274. 10% thereon is 22. Let's check. If I may just run ahead, at the end of the next year, I expect to have nil there. No finance cost. Nothing here. 2,500 over here, and therefore 2,500 there. Because remember, in the fifth year, on the first day of that year, the final 2,500 must be paid and cleared. That leads me to say that the end of the fourth year has got 2,500 in that slot. And so the 10% of 2274, I'm going to call it, say, 226. Does that add up? 2274 plus 226 is 2,500. Do be careful of that. A more mature answer is to round it off so that you have 0 at the end. So what can I say? The interest plus the cash price is finally paid. The interest as a point, as an optional proof, can be said to be 2075, which I hope is what we had upstairs. It should be 2075, no problem. So very easy indeed. Now that's the second step. Step 1, if you remember, was the price structure. Step 2 was this summary table, movement of the liability. Lay out your 6 columns, year 1, 2, 3, 4, 5, and move left to right. It is the easiest thing to do, provided you've prepared for it in advance, which is what we're doing now. So, come with me, please, to the final step, step 3, of course, where I intend to show you what happens in the financial statements, the final accounts. Let me start a new page. Step 3 is what happens in the financial statements as at end of year 1. Now, as we did on the previous session, I'm going to divide my page up into 2 halves. And on the left-hand side, I might use the word easy, which it definitely is. And on the right, I'm going to say slightly less easy. Let's do the easy points, get the easy marks. Of course, we have the income statement and then the statement of financial position. The income statement is absolutely straightforward. You have your cash price, which you remember was 10,425, divided by the life, which is 5 years, and that's 2085. So unless the question tells you otherwise, assume that the contract term, 5 years, is the same as the asset's life. Our examiner, Steve Scott, tends to be quite fair. Most students find leasing a little bit difficult because they haven't done a proper course. And so he tends to make the questions quite clear. Now, if you leave a couple of lines, we can then move down to our statement of financial position. And again, quite straightforward. In the non-current assets section, we're going to have this motor car, cash price, 10,425, less accumulated depreciation, which at the end of the first year is 2085, which when deducted from the cash price should give you your net book value. So 8340 is the net book value. I'm sure you find that very easy indeed. That table on the previous page at first glance looks difficult, but if you practice that, if you think about the issues, it's actually quite straightforward. So we've done the easy bits. Are you ready for the less easy bits on the right-hand side? Here we are. Obviously, in the income statement, we have the finance cost, which is the first year's interest, 793. First year's interest. We'll then come to the statement of financial position. Clearly, at the end of the first year, we have a figure of 8718 that we need to split. So the 8718 must be split between current and non-current. Remember the accounting convention, at the end of every year, you must split that. So the accrued interest is 793. Remember, it's included in the second payment of 2,500. And the capital element is 1707 to give 2,500. And as we did before, the non-current liability is 6218. Please, would you add 2,500 to 6218? And that grand total, of course, is 8718. So that's the proof. The key point to remember, if I take you back to the table, is that the 793, the first year's interest, is part of the second year's first payment of 2,500. Extremely important to grasp that point. So because the first year's 2,500 payment has no interest in it, this one, the second 2,500 has a 793 sitting in there. So once you've done all that, you pick up this 6218, and that is the capital amount outstanding for the future. I hope that makes sense. Notice that the 793 accrued interest for the first year is paid early in the second year. And so we are ignoring future interest, but of course past interest is a current liability. That brings me to the end of this chapter, though I leave you to pick up the next couple of pages, a past exam question with answer supplied. Thank you.